Right now, HMRC has a £100 million supercomputer and it's quietly studying you. Now, innocently, they call it Connect, but it's not really connecting as such. It's more like hunting. It's cross-checking your tax returns against your bank, your employer, and even the holiday photos that you posted online. And it's hunting for just one thing, a mismatch. Now, I've sat on the other side of these HMRC investigations for over 20 years. I think what surprises people the most is that you don't have to have done anything wrong to get flagged for one of these investigations. So today we're going to discuss 6 completely innocent triggers, and maybe some that aren't so innocent, that can dump you on HMRC's doorstep. I'm also going to talk to you about how you can protect yourself from them, including one easy tactic that decides whether that brown envelope that lands on your doorstep is a 5-minute reply or a 2-minute nightmare. So let's start with something then that on the face of it can be definitely not so innocent, and that is going to lead to an investigation. But it can also be surprisingly easier to trigger this sort of investigation for completely legitimate reasons, as we discussed. So you've heard about it before. HMRC have this Connect system that I mentioned. It's this computer which is using millions of data points to spot patterns or these mismatches. And then the system can surface your name or your business's name as someone an HMRC officer should investigate. It's what they call risk-based selection. So to give you an example of this, we've all seen the Instagram or the TikTok reels where there's this kind of meme going around and it's like, how much did you earn last year? And it's a self-employed person going, 12,570, £12,570, and it goes on, right? Now, the reason this is a common figure is because it's the personal allowance level. So it means that if you're earning that kind of taxable profit, if you're earning that or under, paying no tax. Now, of course, there are those people who are deliberately evading tax by declaring things that aren't true. And in fact, you don't have to look much further sometimes than the YouTube comments here to see that people do think that way. But as every year goes on, I think it's less likely that those people are going to get away with it because these new systems, and you chuck in AI on top of that. I mean, HMRC have got so much data they can, and they do open investigations where this data doesn't match. So perhaps you put on your tax return, you sold £22,570 worth of sales, and then you've got around 10K's worth of expenses, which conveniently means you've now got a taxable profit of 12,570 for your business. And as we've said, at that level, you're not going to be paying any tax. But then, if HMRC's computers looked at it, your bank accounts show more income than that because you need to pay for your lifestyle. So on top of this, you've got your Facebook or your Insta or your TikTok accounts, and you've got the new Rangy on the drive and you in front of it, and you've got your 3rd holiday of the year that you're on. Now, this is an obvious discrepancy then that with all those data points, HMRC are going to pick up on, and they do pick it up. And this isn't just theory, because I've sat in investigations where social media activity has been actively discussed inside that meeting room. It's even written in HMRC's manuals that they will use overt open source material, such as social media, during one of those investigations. Now, if you're deliberately doing this and you're undeclaring your income in 2026, you're just running a massive risk. And I actually think at this point, you probably deserve to get caught. But lifestyle mismatches are actually one of the easiest things for Connect to spot if they've got all this kind of data. But the next trigger is actually a lot less obvious because it's not about what you earn, it's about what you're claiming against your tax bill. Now, where this one can actually be accidental, at least from your own point of view as the business owner, is if you're working with an accountant or bookkeeper and they are knowingly overclaiming. And I really, really hate talking about this, and I really hate this is actually a thing, but sadly it is. Now, in our world, we've been involved in many HMRC investigations with new clients. They've come to us and they're looking for support because they've got that dreaded brown letter, they've got an investigation, they've had a previous accountant or somebody doing these tax returns, and you can see some crazy claims inside those tax returns that have gone through an accountant previously. And it's actually super common, particularly in the construction industry. And that's actually in that industry is because there's this kind of mythological £2,500 rebate that everybody wants to seem to get because all of their mates have got it. Now, often that's all because they're using the same accountant who seems to have no issues whatsoever claiming large amounts of fictitious expenses, which is actually, if you do the maths, often the only way you can generate these type of repayments. So I've seen large claims and investigations that we've been a part of where previously they've claimed £10,000 in materials and £6,000 in motor costs, for example, yet the contractor is labour only, he gets picked up at his house and dropped off at site. There isn't really any expenses. And you might be thinking, why is he saying accountant with bunny ears? But it's just because the industry isn't fully regulated. So it's worth knowing. So whilst there are regulated accountants like us, you also have the situation where any of you guys watching could just set up tomorrow and open up an accountancy practice. It really is unregulated. And this isn't to say that all unregulated accountants are like this, by the way. In fact, some of the biggest crooks in the industry have been regulated accountants, but it's worth pointing out the regulation issue if you didn't know about it. And for you, the action point is, please check your tax return if someone else is preparing it for you. I know you're paying them to do this, but there isn't that many boxes on the self-employment pages. Just glance at them and make sure they're at least in the ballpark of what you expect them to be. Because HMRC have so much data on the averages and the expected expenses in a given sector, that it's actually really easy to trigger an investigation if your claim is higher than what they're expecting. And if you get an investigation and you can't prove those expenses, not only are you going to have to pay the tax back that you owed, but they also put fines and penalties on top, depending how deliberate they think it's been. And because of the way the law works in the UK, there's actually no comeback on the person person who prepared the return. If they're not regulated, if they're regulated, their professional body could get involved. But if they're not, there's nothing. You pay it back. You pay all the fines. Absolutely crazy, right? So for me, that's one way to get caught out through somebody else's mistakes. But you can just as easily trigger this on your own just by having a completely unnormal year, like an unusual year. So let's say then you genuinely did have this unusual year for you. So you've had a ton of costs, you've spent loads, but actually for whatever reason, you took very little in. That data that you submit might end up looking like something that looks odd. So then the computer's picked it up and an investigation has been opened up and you're going to be asked to justify the numbers. Now, there's not much you can actually do to prevent that trigger, but the box you put your expenditures in matters more than you might think. So on a sole trader tax return, there's actually only about 9 expense boxes you could fill in. So try to pick the right ones for your type of expense if you're doing this yourself. Now, on top of this, at some income levels, you might not have to fill in any of those 9 boxes. You can actually bundle them all together, all of your expenses, in one figure, in one box. And personally, I've actually seen less investigations on the bundled one box version than somebody that's filled out all the individual boxes, but that could be complete luck. And as well as these boxes, there's also some white space on the back. So when it was a paper tax return, it was just a box that was empty. So, and you can put other information on there that you want to. You can put some words in there to give some more context or some information. Now, I'm not convinced historically HMRC system ever read those boxes, but who knows? In a world of AI, it might help to put some more context in there. But the key here is to keep good records in case you get asked about these numbers. Now, if you've seen enough of my content, you know I always bang on about keeping good records, but you need evidence to prove what you put in the box is true. There's just too many tax court cases out there online, you can go and look them up, where lack of records or good sort of evidence has been the key reason that HMRC have said, cool, I'll have my tax back, please, and then they'll issue fines and penalties on top. So grab yourself a separate bank account, keep everything nice and clean, and then grab yourself some bookkeeping software, something like Xero, to make your life far more easier, and just to make sure that you've got these good records. But most importantly, update them regularly. Now, for anything that you're claiming, so by claiming, I mean you're entering it in those boxes, you're reducing your taxable profit, you're reducing your tax bill. Even if you've done your research and you think it's claimable, I actually think there's one key rule to bear in mind. And it's actually something my mum told me about like 20 odd years ago when I started my self-employed journey. And that's, look, with any expense that you're claiming, you need to feel comfy explaining it with a straight face to an HMRC officer if you had to. You have to explain why this is wholly and exclusively for use in your business. And if that explanation on its own feels a bit false, a bit flimsy, it's likely that should be like your own internal red flag that says, look, maybe we should consider not claiming this. And then on top of that, if you are unlucky enough to have an investigation because you did have an odd year, the computer's flagged it, if you've got great records, it should be relatively simple to answer the questions and then just move on with your life. Now, so far, every trigger that we've covered comes down to numbers that just don't add up. You know, there's a pattern interrupt there somewhere along the lines. This next one's slightly different because it doesn't matter how good your numbers are, HMRC could still want to come and look at you just because of the industry you're in. And that fits quite well because after hearing all of what I just said, you might be thinking, man, HMRC should just leave me alone, right? They should go after the genuinely dodgy shops. So we're talking vape stores and barber shops, right? That's normally the ones we see in the comments. Well, during 2026 and 2027, HMRC are planning on carrying out more than 30,000 what they call high street interventions. And I'm presuming that Connect system is going to be helping them pick which ones they should be going after. Now, when they say high street interventions, that can be all sorts of measures from what we're seeing. There could be tax investigations like we're talking about. There could be covert surveillance. There could be raids. There's some reports on that. The recently formed high street organised crime unit involved to do those raids. In fact, previously in winter 2025, they arrested 924 people and seized over £13 million of suspected criminal proceeds from those types of businesses. But it should be said that whilst, look, there's clearly new focus and resource here, it's not a surprise given what's happening out there, HMRC have always had an eye on cash-based businesses. I've been part of a few HMRC investigations over the years where they've looked at cash-heavy retail businesses, and one thing that stood out time and time again is, again, the need to keep good records, but particularly around your cash. So you need evidence to show, look, that's the cash I took in, and this is what I did with that cash. So I remember one particular investigation that ran over Christmas, is what sticks in my head, where HMRC ended up arguing about the cash situation. They were like, look, we think you're not declaring everything. So they used like a build-up. They went, this is your bank statements, this is your tax returns, this is what's in your accounts, what you say you're drawing, and this is what profits we think other stores make, and this is why we think you're undeclaring your sales. Now, sadly, the shop wasn't actually doing that well, so they did have solid records and they were able to debate this point quite heavily. But in this one, they didn't have officers turning up unannounced or anything like that. But in some HMRC investigations, they will actually send officers undercover to do things like log the number of visitors at certain times, to estimate what kind of numbers they should be declaring at certain times. There are all these different angles and powers they've got. But the challenge here is that you don't actually have to have done anything wrong to be caught in the crossfire of these HMRC investigations. So I said, over this 20-odd year period of being in accountancy, I've seen barbers and hairdressers particularly, they've been looked at least multiple times since I've been in the game. Now you've got on top of that criminal gangs being involved in those type of businesses. HMRC have even more reason to look at them. In the past, they've often done campaigns, so they'll just go on almost a fishing exercise. They'll say, they used to be called like records checks or something like that, and it's a way to get in and look and then see, look, is there something else we want to have a look at? So there's a few ways they've tackled it previously. So oddly, just being something like a vape shop, a barber shop, a souvenir shop is going to be an innocent flag regardless. You can't do anything about it if you're in that sector. But you can keep good records. So keep good records on your cash and your expenses. And it's not about necessarily keeping every receipt where this is concerned, but you need to be able to prove and record what's happened with that cash, as we've said. And there is nothing illegal about taking cash. It's often seen as a dirty word, but in reality, it's just important to document where the cash is going. For example, if it looks like your business is just getting its money in and then in cash, and then it's paying it all out on expenses, and you're never paying yourself, there's no record of that. How are you even living? It's an obvious flag. And in the old days, what you would have had is you'd have had a big cash book you have all pages on, and you'd write down the balance of your cash at the start of the day. You'd put what came in, what went out, and at the end of the day, you'd have a balance to carry forward onto the next page. But these days, you've likely got software to keep your records in. But how do you know you're recording it correctly? Because what I find is frequently is that many business owners that we see, the software works by connecting your bank to the software and you categorize all of the transactions, but it doesn't naturally do very well with cash. Cash can be something that's quite messy to deal with. So I think if you're scared about that and your record keeping and potentially an HMRC investigation, just do go and seek some professional help. So whilst you might not have a choice about the sector you're in, if you're a barber, you're a barber, the next trigger you've got slightly more control on, but it can still catch you out even if you've done everything right, because someone else could have messed up their paperwork. Because by far, one of the easiest ways to get your tax return investigated, and we see this all the time, it pops up very frequently, is to not enter a number in your tax return where HMRC know there should be a number, or if they've got data and the number you put in doesn't match. This supercomputer we're talking about is absolutely going to spot that one. I don't even think you need to be a supercomputer just to spot those two differences, but that will trigger something. We've already said HMRC get data from all sorts of places now, so you've got it coming in from your employer, your banks, payment platforms, gateways, you've got crypto exchanges, the land registry, and loads more. So if you submit a tax return with no number in a box and they know there should be a number, instant investigation. And this actually happens fairly frequently because it's just easy to miss something trivial. So that extra £10 of interest you had, or the £100 in an overseas bank account that you thought, well, it's not in the UK, so I don't need to tell anyone about it. Or perhaps sometimes you've just got your dates mixed up. Example, we once had a client who received an investigation because HMRC said, well, you've sold a house in the tax year. You've literally sold a property. We know you have. It's not in your tax return. He was like, when we asked him about it, he said, no, I didn't. There's no way. And then when we looked at the underlying documents, it turns out the house completed on the 5th of April, which is the last day of the tax year. But his documentation from the lawyers had different dates on. So he just presumed it was in the next tax year. So HMRC had the data, and of course, it wasn't in his tax return. So in this instance, they're completely correct. Instant investigation, all got resolved, but it was triggered because of this date issue. But I did say this could happen to you because of somebody else's mistake. So this one happened. Say you have employment income from your job, you enter it into your tax return. If it doesn't match what HMRC have, which is what the employer sent to HMRC, it can also cause an instant investigation because again, you've got a mismatch. So yours can be completely correct. You've got a P60, a document showing what all that was, and you know what it should be, but employers aren't always the best at sending the right data. And if they have to amend it, HMRC's PAYE system is notoriously bad for just not updating and getting the numbers wrong. So we actually had a client who worked for one of the world's largest banks. This isn't a small business. This is one of the world's largest banks. And the data that they'd sent HMRC was just wrong. It was clearly wrong. And his documents and his tax return were right, but we still had to deal with the investigation. We still had to resolve that issue because the data that HMRC had different. They're well within their rights to ask the question. So in order to avoid getting investigated for really stupid reasons, just be sure to check that you've got all of your documents ready. You've got it there. You know everything that should be on that tax return. Or if you've got an accountant or a bookkeeper who's doing this for you, make sure you know you've supplied them all of the documents before they do it. Because it is funny, you can have conversations with business owners and they're like, oh, I've got that interest in that account, but I don't think you want to know about that. You know, wink, wink. There's no point winking at me. HMRC have the data. They know, get it on your tax return, avoid that investigation. Now, I couldn't talk about red flags without talking about VAT. The VAT office. In my experience, they're the only ones with the actual resources. Now, this is changing HMRC. I think it's like 5,000 extra officers, millions of pounds being poured into compliance. But historically, VAT is the one place you don't mess with. They're the ones of all of the resource, and they're the most frequent investigations we see. And that's not a surprise, considering historically it's been a massive area for tax fraud. And And with these investigations, in 99% of the cases that we see, the client's done absolutely nothing wrong. The reason for the HMRC check is usually, again, HMRC's computers. They can identify that, look, this particular VAT return is looking out of place. Say, for example, one period you're actually due repayment. HMRC need to pay you the money back, but normally you pay each time. And this is particularly important if you've never submitted a VAT return and the first one you submit has got any sort of repayment on it, they're very likely to want to look into it. And what they want is they normally want you to prove why they should pay that money back. They want to check the claim. So they'll go line by line, pick out and ask for a few receipts to prove that actually it's completely legitimate. So from what we see, repayments, big flag, regular repayments, even bigger flag, large changes to sales or purchases, red flag. But overall, a change in the pattern from your regular return is the big issue. It's all about these patterns, and this can be completely normal, and actually it's innocent behaviour. But here though, receipts as evidence really do matter. The VAT regulations and the tax law around it is different from the other law, so quite often you're looking at evidence. Well, what does evidence and what does records mean? But for VAT, it's very specific about what kind of VAT receipts you need in most cases to claim the VAT back. So making sure that all of your receipts are stored, and more importantly, they're in the correct name. Because HMRC can be really funny about names and addresses on VAT receipts. So I know it's a hassle, but you get that online bill and it's got the wrong name on it, particularly say if you're a limited company or something like that. Please change the name and address, because if those receipts are wrong and you end up in an HMRC investigation, chances are they're going to add it back. They're going to disallow it from the return. So not only will they want the VAT back, they'll then say, well, your return's inaccurate, mate. Here's a bill. Here's a fine and penalty. It's just ridiculous. So just make sure you get those names and those addresses right. So I think finally on this one, surprise, surprise, bit of a theme, keeping good, clean records and having those VAT receipts is going to be your best line of defense. So if you do end up with one of these brown envelopes arriving on your doorstep, this is exactly what I would do next so that it doesn't spiral into something more horrible. So it lands on your doormat, don't ignore it. That's it. Sounds obvious, but it's actually really, most of the time, it's a simple case of them wanting some information from you. So it can easily just be, look, just send in some information, and actually there's no meeting, there's no battle. It's not going to turn into a story where it's like, HMRC are evil and destroyed me, although actually that would make quite a good clickable YouTube video. But if you ignore it, HMRC are going to continue to hammer you, and they are just going to throw the book hard. The penalties get bigger, everything else. Just interact with them, answer in a timely manner. Because HMRC and these computer systems, they don't care if you made an innocent mistake. If it's a flag and there's a mismatch there, then there's likely an investigation you've got to answer. They have legal powers to ask this. And what happens after that is going to be completely down to you, your record keeping, and how well and how fast you can respond to them. So if you found this video useful, please do like the video, subscribe, and leave a comment below. Let me know your thoughts and experiences with dealing with HMRC, and I'll see you on the next one.